Welcome, everybody, to June 10th, the Market Update Desk with Scott Riley and Mortgage One, NMLS number 157524. We've got a lot been going on the last couple of days. Saw something interesting, a post as it related to local market and inventory that I saw online yesterday. Year to date, last month, active listings in the greater Grand Rapids area were about 50% of what we had last year. So we're definitely still seeing a very tight inventory. We're down to about 1.1, 1.2 months of inventory in West Michigan. So those that kind of held off buying are continuing to see tight market, elevated values. So if you waited, you're actually paying more and facing actually a more challenging market to try to get an offer accepted. Let's kind of go into what the market is showing us today. Tensions in the Middle East are once again elevated. We saw that an American Apache helicopter was down by what appears to be Iran the other day, and in response, looks like United States sent some missiles into some targets into Iran, and now there's definitely concerns of any potential resolution anytime soon within the Middle East. And we are seeing oil futures slightly elevated, but definitely not where they were 3 and 4 and 5 weeks ago. In China, we saw wholesale inflation rise the fastest pace in nearly 4 years. Now, that was driven by a rise in raw materials, the Iran conflict, meaning energy, and AI investment. Their PPI, or wholesale inflation index, jumped 3.9%. The previous month was at 2.8%. So that's a pretty elevated wholesale rate within China. Now, the U.S. CPI, Consumer Price Index, came out this morning. It was a report that was being very anxiously looked at for what the rise in inflation would be to consumers. And yes, we saw a substantial jump month to month in headline, up 0.5%. Now, that actually was at the expected levels, but it definitely is a big jump. And now, year over year, we're at plus 4.2% for CPI. Now, that's a rise from April's 3.8%. Much of the increase within that was, of course, in energy prices, which rose 3.9%. In fact, we're seeing energy now year over year up 23.5%. Food increased slightly, 0.2%. Shelter costs came back to a tamer number, 0.3%. It's actually a half reduction, a whole half-fold reduction from the previous month of 0.6%. Transportation services fell 0.6%. Kind of shows us that some of those energy costs have not completely filtered through to the wholesale level, it appears. New vehicle costs actually came down 0.3%, while used cars increased 0.1%. Airline fares up 2.7% month over month and are now up 27% year over year. Now, the core rate, now that strips away the volatile food and energy prices, rose 0.2% month over month, much slightly softer than the 0.3 consensus estimate that we were looking at. It's also rose from 2.8 to 2.9% year over year. Interesting, within core, if we took airline fares and shelter, those combined accounted for 0.18% of the total inflation of 0.2% or 0.1%. So all other inflation within core was very, very, very tame. So we're seeing where these costs are being elevated within. So this hot inflation data is coming on the heels of the next Fed meeting, June 16th and 17th, which is the first meeting that Fed Chair Warsh will be leading. Now, we're expecting probably another pause within the Fed rate decision. Definitely don't look for a rate cut, and I don't think there will be consensus on a rate increase, although there may be some that do vote for an increase. Now, one thing I read this morning was sovereign bond sales. Italy, once again, in their sovereign bond sales syndicate led the way, or year to date, with total syndicate sales of 18 billion euros. In fact, Italy has been the leader in bond sovereign sales 8 of the last 10 years. Other countries that have been that are in the top 10 for sovereign bond syndicate sales are Germany at 14 billion euros. Then we see Australia, Mexico, Belgium, Serbia, and the UK. What this is showing us is there is definitely a marketplace for international sovereign wealth sales other than the United States. So we're seeing these other countries having an increase in total sales. Now, this plays into today's 10-year bond auction that the United States has at 1 o'clock. So we'll see where this bond sale actually ends up as it relates to international appeal. We saw total mortgage applications were up 11% week over week last week. Even though rates are elevated, we're still seeing a very busy, active market. Within specific markets, we're seeing the Dow is down 481 today. Seeing big variations within the Dow, but keep in mind, this 400 down, 500 up, 200 down, 300 up. That sounds like a lot, but remember, the Dow is over 50,000 points, so as a percentage, it's not as big as what that number appears. Bitcoin has definitely frosted as of late. In fact, Bitcoin's down to 61,800. So seeing a cooling in that market. 10-year Treasury yield is flat today at 4.52%. So we'll see where everything plays out. Tomorrow we're going to get wholesale inflation. Probably will be an elevated amount. So we are cautiously looking at tomorrow's results of the data. We are here available on call, 616-293-2189 to help get you pre-approved, go through loan programs, also work with your realtors to help get your offer accepted. Give us a call, put our 31 years of experience and our team behind us to help you. 616-293-2189. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan.